For a property, would you do straight line or cost segregation?
Cost segregation. Because if you take the assets in their true life, you're actually pushing a lot of the components of the house up to the front of the life taken on that property. So instead of depreciating the asset over 27 and a half years for a residential piece of property, you're actually breaking the house down into 5, 7, 10, and 15-year property asset classes and taking those components in their individual lifespan, which in turn leads to a larger depreciation deduction in the first 5 to 7 years.
How much does it actually save you?
It could save you up to 30 to 35% of the value of the property in the first 3 to 5 years.
Will it increase your chance of getting it audited?
No.
What is bonus depreciation? How do you tie that in?
Bonus depreciation is a section of the tax code that is 26 USC 168K and allows you to take a percentage of the value of the property, and it has to be personal property, placed into service in a business. It allows you to take deductions of depreciation faster.
How do you do a cost segregation study? Do you do it yourself?
No, typically you hire companies like MSC out of New Hampshire. They walk the property, they measure the property, they take photos of the property, and they put together a report. And this report is detailed about your property. It takes into account the cost of the house. It takes out the land value because you cannot depreciate land, and it breaks the house down into its individual components, and it gives you a list of the cost that was used to build the house.
Who do you use for your cost segregation?
I use my buddy Jeff out of New Hampshire. He's with a company called MSC, and anytime I've got a property that needs to be depreciated, I give Jeff a call.
How soon do you see the savings from either bonus depreciation or cost segregation?
You'll see it on your tax return in the first year.